From Daniel, why do you use December 18 lows as a benchmark for prices?
It's very important because you want to look at relative performance. And when a market is targeting a selective area, which was 2346, that's the S&P December of 2018 lows, you want to see the stocks, Scott, that are able to maintain support above that and not trade below. Those are the stocks that, as you defined before, can sit and rest while someone waits to hand them a drink of water. Those are the types of stocks that don't have to get off the track and go inside. They could wait out the aggressive sunshine and wait for healthcare professionals to give them that drink of water before they could start running again.
All right, Steve Weiss, come to you. Alvaro, Costa Rica, wants to know your thoughts on Alibaba. Does it have momentum to catch up with Amazon?
That's a good question, and the answer is no, it'll never catch up to Amazon. The reason being that Amazon is a U.S. domiciled company. Baba is a Cayman and a Hong Kong domiciled company, and the accounting's not the same, so you're just not going to get the same kind of multiple. It's also not growing as fast as Amazon. It's trying to get the additional leverage. But the answer is no. It doesn't mean you shouldn't own it. I own both, and I'm sticking with both.
All right, Liz, we're coming to you now from Zach in California. Says, I'm a young investor, have 30-plus years before I need my money. Are treasuries even worth buying right now at these yields?
First of all, Zach, kudos to you for starting early. Over your investment time horizon, the chances of treasuries producing a ton of return are probably low, especially in the next few years here. So what I'd rather see you do is own a more diversified bond portfolio that can offset those risks with some more creative approaches to the market than just straight treasuries.
All right, Michael Farr, to you now from Stewart in Chicago, Illinois. Where do you see Mondelez over the next year?
Stuart, I like Mondelez for the next year. It's one of the stocks I own. It's a 20% discount to the peer group, and it's still earning money as people are eating at home. Nabisco brands, Oreo cookies. I think it'll certainly move with the markets and may outperform if we see further market weakness.
All right, let's do round two. Pete, Nigerian, Krista, Minneapolis, Minnesota. Stone's throw from where you are right now. What do you think of what do you think of 3M? It's an all Minnesota round here.
Yeah, it really is. I like it, Scott. I actually own the stock, and they're for a variety of reasons. I think you have great cash flow, and then you look at the yield of 4%. But some of that might change, obviously, in this new environment that we're in, and we'll see if that has to change for them. But I like the diversity of their businesses, and I think they're doing an excellent job. Obviously, they were in front of everybody in terms of the masks. Everybody talks about that. So there's a lot of reasons I think you can still like it. It's made a nice move off of the lows, but it's still, over the last couple of years, it's just been really, really choppy and not traded very well. So I like to see this stock actually start to move a little bit higher. It's well off the multi-year highs, but I think it can get there because of the diversity of the business model.
All right, Weiss, to you, Michael in Phoenix, Arizona. Any thoughts on Peloton going into earnings? Mr. Peloton.
Yeah, I had sold it. I bought it back. The numbers came out Friday were showing great growth. There's an 8-week wait for the bike, according to some friends who ordered one. Maybe one of those is Pete. He's getting a little big, sitting in his man cave, just chilling and drinking tequila and popping stuff, grapes in his mouth. So, yeah, I like it, and I think that it survives after this.
Okay, I thought you had another thought there. All right. Joe, Phil in Oklahoma, Domino's, is it a buy?
I'm out of thoughts.
That was obvious. You finished, your tone was sort of on an up. It wasn't like, you know what I mean? It was an up. Like you had something else to say.
Yeah, I hear you. I was waiting for Pete to respond.
All right. Are you with me? I read Joe. Domino's, Phil in Oklahoma. Is it a buy? Hello.
Are we ready? Yeah. Domino's, yes, it is a buy. And back to Daniel's question before regarding December of 2018. This is a V stock. I'm looking at it right now. Domino's never took out its December of 18 lows. You get the V recovery. Reached an all-time high at 387 back on the 22nd. I think it gets above 400, although I'll never try the pizza.
You've never tried it ever?
No. Nope. And I won't even order it now while we're in lockdown.
All right. I get the New York thing. I mean, I'm with you on that, but I mean,
it's a New York thing.
Yeah, I know, but
yeah, I see the pizza you're making on social media. I'm going to wait for that.
You got to at least try Domino's once.
I think Pete's tried it enough for all of us.
Yeah, probably so. Liz, liquidity, Nicolos, can a market be too liquid?
First of all, I eat all pizza. I don't discriminate against pizza. A market cannot be too liquid right now because it's protecting us from this becoming a huge financial crisis. Over time, what it's going to do is lull us into a false sense of security. So we need to make that transition out of some of this support, and that transition is probably going to be messy.